Welcome back to my channel. Here again to talk about finances and how they really can be a blessing to you, your family, the body of Christ, and all of humanity when they are managed properly. We've been talking about financial basics, and today let's talk about saving versus investing. And we use those interchangeably, those terms, but the truth of the matter is that there is a difference, particularly when it comes to the money or the earnings that you can make on your money. There is a difference between the two. I recently looked at bankrate.com, and according to them, the national average around the end of August 2023 was 0.55%. That's about a half of a percent. Now, that's the national average, meaning that there are interest or accounts that pay more, and there certainly are accounts that pay less, but that's the average amount. Now, that doesn't mean that's the only thing that you can get, because there are some things called high yield savings accounts. And right now they're paying about 4.5%. That's 8 times as much. Now that sounds really good. That 4.5% APY, or annual percentage yield, which is the real interest rate, until I also tell you that if you had invested in a stock index like the Vanguard stock index at the beginning of this year, well, according to their website, you would be earning somewhere around 12.5 to 13%. Yeah, that even sounds even better. There is a difference in what you can earn, but there is also a difference in the amount of risk that you have to take to get those earnings. So we're going to dive into it, talk about the relative advantages or disadvantages. And remember, it's not either or, because from my personal experience, I've balanced it. I've used savings and still continue to do that. And I've used investing, both to get me on my wealth journey. So let me remind you that I am not a financial advisor. I am not a financial expert. I am sharing with you principles that I have used over the years on my slow but consistent journey to financial stability and independence. When we're talking about savings, we're talking about monies that we are putting in a place that is relatively safe, and that's going to bring us pretty much a guaranteed or solid income or rate of return. Now, it could be a lower rate of return, but you're going to get something. Investing, on the other hand, it's talking about taking a bit more risk in purchasing assets. And our hope is that the value of those assets over time is going to increase, and that we're going to get a higher return because we're willing to take on a bit more risk. And taking on a bit more risk, come on, let's just put it simply. You could lose money, and take it from me, it does happen. You do lose money, but over time, there is a gain. So let's start with savings. Now, over the last few years, savings have gotten a really bad rap. And people have said, you know what? When you are putting money in some type of a savings account, a savings vehicle, you are really losing money because of inflation. And so let's say if inflation is at 7 or 8%, which during 2022, it was that high, and you are only earning 0.55%, or in a high yield savings account, 4.5%, in effect, inflation is just eating up your money. The value of your money is just being consumed because prices are going up so high. Now, thankfully, recently, the inflation rate has dropped to about 3.5%. And hopefully it will stay low or it will decrease, but we don't know that. So even with savings accounts, keep in mind, there's a risk that your money's not as valuable as it was perhaps when you initially opened this account. But you still are earning maybe some small level of interest. And I'm going going to give you 3 reasons why I think there is value still in savings. First of all, peace of mind. There is a scripture in the Bible. It's in Ecclesiastes 9 and 11. It's real simple, but it says time and chance happen to us all. There are things, in other words, life just happens. It's not necessarily that we did anything, but let me give you an example. If you have a car, sooner or later, the brakes are going to need repair. Sooner or later, you are going to need new tires. I don't care how good that refrigerator, that computer, that iPhone is, right? We all know. I mean, sooner or later, it's gonna break or it's gonna die or it's gonna be so obsolete that you just want to get rid of it anyway because it is just no longer functional. So those things happen. And when those things happen, my choice is not to go into debt. And so I choose to have cash available. Some people call that an emergency fund. You can call it cash on hand, just a life fund. But I have that kind of cash on hand so that I can immediately pay off those expenses. You're not in this stressful situation because life does happen. Well, that's one of the reasons why I think a savings account is important. Let me give you another one. Short-term expenses. Again, I don't like money stress. I don't like to stress about it and think about it. So if I know that within a couple of months, I'm going to need money to do something, I don't want to have to liquidate assets and stocks and bonds to go on vacation. I don't want to do that. And I don't want to go into debt for it. So for those reasons, I like to keep money in savings. Now, I'm going to give you a third reason, and this one doesn't really apply to me, but I think it's worth talking about. You know what? You have to be honest with yourself. Some people hate risk. I've talked to a couple of people who've asked me to chat with them about their finances. And again, I'm not an expert, so I am just sharing with them my experiences. And what I have found out is that even though I don't like to lose money, some risk is worth taking. But let's just say you are a person and you don't want to lose a penny. You don't lose any money. Well, in that case, investing might just be a little scary for you. Seeing the stock market go up and down, buying real estate and then seeing the real estate prices go down, or getting a horrible tenant who won't pay rent over an extended period. It just may be too much for your personality. And if that is the case, then perhaps savings is a better route for you. It may be worth praying about and reaching out to people who are experts, who can really talk to you about your very specific circumstances. And maybe savings is an alternative. You will not earn as much. You won't. But on the other hand, you might sleep very, very well at night. I'm going to put down in the description, there is something called a savings calculator. And I think, it may be of benefit to at least look at the amount of interest you would earn if you just get the national average on your savings, which is 0.55, and say that you start off opening that account with, say, $100, and then you put in $25 a week or another $100 a month, and you continue to do that for the next 10 years. At the end of that time period, you would have deposited or put in more than $12,000. That's a good thing. That's what you put in, and you would have earned a little over $300. Also not bad, but also honestly not very good, right? That's not a lot of money. If interest rates were higher, if you went to a high yield savings account, you would earn 8 times as much. Now, again, that may not blow you away, but it is something probably a lot less than the 10% you might have earned, which is the average on investing. But again, it's not as if you're not taking risks, because you know what? Even if you open a high yield savings account, that interest rate could change on you, and it could change quickly. And so all of a sudden you were at 4.5% interest. The next thing you know, you're at 3, 2, and back to 1, right? Or even lower. So there is still risk. Here's my number one reason for investing: wealth acceleration. Because think of it this way: if saving is addition, then investing is multiplication. I'll say that again. Investing is multiplying. According to Good Financial Sense, if you were to invest that same $100 per month, but you did it in stocks or mutual funds, a group of stocks, so to speak, and you earned at least 8%, which is really not that much, because that's about 8 to 10% is average, right? You would still have put in about $12,000, but you would have earned about $5,000. And this does not include any dividends, which are other payments that you can receive generally on a quarterly basis. Here's an interesting fact, because we're talking about risk and taking on more risk. I read an article in NerdWallet, and that article essentially said, you know what, over the past 100 years, the stock market has earned about 10%. That's with all the risk that you have to take on. What's really interesting is what's happened over the last 100 years. You know, we've had the Great Depression. We've had the demolition of the wall in Germany, of the Berlin Wall. We've had the first organ transplant. The first human in space. We've had World War II. We've had the Iraq War. We've had the first Black president. We've had the banking crisis that happened, remember, around 2008. We've had a pandemic. Oh my gosh. Yes. So we have been through some things, and yet with all of that, the stock market has continued to earn 10%. So yes, time and chance happen to us all. Risk is going to happen. Good things are going to happen in our lives. Challenges are going to happen in our lives. We cannot escape those. But what is interesting is that throughout that, the stock market has continued to earn. So people who continue to invest in the stock market continue to have earnings, even though they were taking risks. Now, I want to be completely honest. There were some months, some years during that time period where there were tremendous losses. And I know even in my stock portfolio, I saw tremendous losses even during the pandemic. But things have really increased, and I've seen a turnaround, and much of those losses I have regained. And here's the interesting thing. Before the pandemic, I had a ton of gains. So I had some breathing room when things went bad. And I also had some savings that weren't earning almost anything. But anyway, there are cycles of life. There are cycles in the stock market. And it is going to happen. We all get a little nervous when we see that things are not looking good. However, I still believe that investing is an important part of wealth acceleration and growth over time. Not over maybe a 1-year period, but over time, it is important. So I would say, again, know yourself. Pray about it. And I know I say this so much, but I mean it. Pray about it. Take a moment to stop and think and pray. And face your fears if necessary, and find the balance that works for you. The balance between saving and earning less, and investing and earning more.